Hello and welcome everyone to Solar Alberta's 2021 seminar series. Today's webinar is called How Solar Can Participate in Alberta's Carbon Market, Alberta's Technology, Innovation, Emissions Reduction Regulation, and how it relates to solar. My name is Lorraine Swift and I'm the Fundraising and Programs Lead at Solar Alberta. I'd like to take a minute to acknowledge that I'm hosting you today from Treaty 6 territory in Edmonton, Alberta. Treaty 6 territory is the traditional gathering place and home of many Indigenous peoples, including the Cree, Saulteaux, Dene, Papas Chase, Blackfoot, Nakota Sioux, and Métis, nations whose ancestors have cared for and nurtured these lands since time immemorial. We were delighted to have so many people register for this event. Please note that we will be recording this webinar for future distribution and also broadcasting on Facebook so that those who missed out on registering through Zoom can still participate. Today, we will be hearing from 3 informative speakers about how solar can participate in Alberta's carbon market. Following the presentations, there will be a Q&A period in which you can all participate. Throughout the event and after, you're encouraged to give us a shout out on social media using hashtag SolarAlberta. We will be using Zoom Q&A for questions rather than the chat box, so please enter your questions in the Q&A section. You should be able to click on that section of your Zoom toolbar. You can upvote good questions that others have asked or post some of your own. The questions that are voted up will show up at the top of the list, and we'll be pulling primarily from those for the moderated Q&A, as we likely won't have time for all questions. And now for a little about Solar Alberta. Did you know that this is Solar Alberta's 30th year of operation? Solar Alberta is a not-for-profit society that's dedicated to public education about renewable energy and energy efficiency. We also serve as the hub for the solar industry in Alberta. Our membership is made up of individuals and businesses. We provide a number of services, including managing a solar directory through our website, which is the most popular directory for solar energy and green building services in Alberta. In this way, we act as a bit of a bridge for installers and suppliers to connect with their customers and clients. We have 338 total members, made up of 159 business members and 179 individual members. We also run a number of educational programs, such as our annual solar show and many networking and outreach events to special populations. In 2021, our solar show reached people from over 60 different municipalities and countries. We are offering just one more of our 2021 Solar Series webinars aimed at the general public on Thursdays over the lunch hour, but we will have many more to come in 2022. You can also find archived videos of our previous webinars on our website. We're currently accepting registrations for our September 16th event, which we are co-hosting with our partner, Women in Renewable Energy. Mind the Gap, Best Practices to Close the Gender Gap in the Renewable Sector is our September webinar sponsored by Butterwick. We're also working with our partner, Empower Me, on a series offering Rooftop Solar 101 education seminars to various diaspora communities in Alberta and across Canada. The first of this series is planned for October 13th in Mandarin and is sponsored by the Emerald Foundation. You can register for both of these webinars on our website. This fall, we will be running a number of online courses for the solar industry professionals or those transitioning into the sector. Our courses are online Tuesday and Thursday evenings on 3 to 5 nights over 2 to 3 weeks. Please see the registration links in the chat box for these upcoming events or find them at solaralberta.ca. We also have confirmed the dates for our 2022 annual solar show. We will be offering online seminars from February 7th to 11th and in-person networking events in both Edmonton and Calgary on Friday, February 11th. I would be remiss if I didn't also mention that a few months back, Solar Alberta won a 2021 Emerald Award in the community group or nonprofit category. For 30 years, the Alberta Emerald Foundation has celebrated the outstanding environmental achievements of many organizations and individuals across Alberta. We're incredibly proud and thankful to have been recognized in this manner for the second time in our own 30-year history. We would like to take this opportunity to thank Radical for sponsoring this event. Given Radical's unique experience in emissions management consulting and carbon credit trading, we are happy to have them as a participating sponsor for this event. We're always interested in developing more partnerships for our events. If you or your company want to work with us to educate the public about the benefits of renewable energy, energy efficiency, and climate change, please don't hesitate to reach out. Introducing our presenters. Justin Wheeler is the Executive Director of the Climate Implementation Compliance in the Policy Division of Alberta Environment and Parks. The Climate Implementation and Compliance branch is responsible for the implementation of the Technology Innovation and Emission Reduction Regulation and the associated emissions offset system, also responsible for the Specified Gas Reporting Regulation and the Renewables Fuel Standard Regulations. The branch also oversees the TIER Fund and is responsible for the governance of broader climate programs across the government of Alberta and partner organizations. Justin is a professional engineer with over a decade of experience in greenhouse gas regulation and policy. Lindsay McLaren has been an emissions offset policy specialist in the Department of Alberta Environment and Parks Climate Implementation and Compliance branch for the past 7 years. In her role, she provides advice to the government on the effective implementation of the emission offset system and identifies and implements continual improvement measures. She also provides information to stakeholders who are accessing or want to access the emission offset system. Lindsay's industry area of focus is oil and gas related emission offsets, and her main focus is to develop and maintain the related protocols and support to the stakeholders who use those protocols. Prior to working for the government of Alberta, Lindsay was an environmental consultant for 10 years and conducted environmental site assessments, environmental impact assessments, greenhouse gas emission audits, and environmental management system audits. Christine Ward is the Solar Business Development Manager at Radical. Experienced in the startup ecosystem, Christine has worked with numerous technology companies and entrepreneurs to help them grow and kickstart innovative businesses. Leveraging this experience and passion, Christine leads Radical's Accelerator program to identify high-growth sustainability startups for Radical to work alongside and support. Today, Christine focuses on informing and supporting businesses looking to transition towards renewable forms of energy, specifically solar power. Leveraging Radical's position in the market and experience generating offsets, Christine supports clients looking for solar offset solutions for both aggregated and large-scale solar projects across Alberta. And now I would like to turn the mic over to Justin Wheeler. Justin, are you?
I am. Sorry, I'm slow on the clicking. I was busy sharing my screen. Thank you very much for the intro, Lorraine, and to Solar Alberta for having us. So Lindsay and I are going to tag team a bit of an overview of the tier system for you, and then we'll turn it over to Christine to kind of delve into the developers and business view of the system. So I'm going to go first. I'm going to give a high-level overview of the tier system. Forgive me, I'm not going to say out the acronym every time: Technology, Innovation, and Emission Reduction Regulation, which we call tier. I'll give you a bit of background on the regulation, how it works in general, and then a little bit about how it works for renewables. And then Lindsay will get into the details on the offset system. So first, a little bit of history. We have a long and proud history of carbon pricing and emissions trading in Alberta. We were the first jurisdiction in North America to implement a regulatory system, which was the Specified Gas Emitters Regulation. That came into force in 2007 and was in effect for about 10 years. And that regulation also established Alberta's emissions offset system, which is a regulatory emissions offset system embedded right within those regulations. That regulation covered about 100 facilities in Alberta, the largest emitters across a number of sectors. And basically every facility had to reduce its own emissions relative to historic performance. And it focused on direct emissions only. Starting in 2018, we transitioned to the Carbon Competitiveness Incentive Regulation. The big change there was for electricity, actually. So it affected all sectors, but it was the biggest swing for electricity. So we moved from each facility being compared to its own historic performance to output-based allocations or performance standards for each product produced. So a coal-fired power plant went from having to reduce 12% and then 20% off its own historic emissions to being compared along with everyone else who's producing electricity to a clean as best gas benchmark of 0.37 tons per megawatt hour. The CCIR, which is the acronym we used for that regulation, also expanded coverage to be both direct and indirect emissions. And it, at the same time, a provincial carbon levy came in place and was in place until June 2019. So that also impacted the emissions offset system because we make sure that we don't double price emissions between the explicit carbon pricing systems and the emissions offset system. CCIR also created an opportunity for facilities to opt into the regulation. So small facilities that were not required to be regulated had the option of coming into the regulation and thereby coming out of the carbon levy as long as they competed directly with a regulated facility or if they were a highly trade exposed facility. Starting in January 1st, 2020, we transitioned again. So TIER is the third generation carbon pricing regulation in Alberta. It's similar in a number of ways to the CCIR, in particular for electricity, so that clean as gas benchmark remained across the two regulations, and the regulatory emissions offset system carried over through all three regulations. So the same project could remain an eligible pathway to compliance throughout all three regulations. Regulated facilities are still those that emit over 100,000 tons since 2016 or in a year since then. And there's still a pathway for facilities to voluntarily enter the system. The biggest change with TIER is because the Alberta stopped its carbon levy in 2019, and then the federal government decided to apply Part 1 of the Greenhouse Gas Pollution Pricing Act, which is the federal act that covers carbon pricing. And Part 1 is the fuel charge, so the consumer carbon price under that act. The federal government decided to apply that also starting January 1st, 2020. So at that time, a number of conventional oil and gas facilities would have been subject to the federal carbon price. So under TIER, we created a pathway for those facilities to aggregate, which means to collect together a number of individual sites under one aggregate facility and voluntarily enter the regulation. So that approximately doubled the number of facilities that were regulated under the system. The Alberta emissions offset system had some minor improvements and kind of evolution throughout all those regulations, but for the most part, it continued as a continuous regulatory system through all three regulations. There's a link there to the regulation webpage, which has the regulation itself, as well as a number of the guidance documents and standards for people who want more information. So a high-level overview, as I said, electricity facilities continue to have a single good as best gas benchmark of 0.37 tons per megawatt hour. So for those of you who aren't familiar with industrial emitters, that constitutes about a 60% reduction target for an average coal-fired power plant. It's very close to the performance of the top combined cycle generating natural gas facility in Alberta, and would be about anywhere between kind of a 20 and 40% reduction target on a less efficient gas plant. Facilities that outperform that benchmark, like a cogeneration facility or renewable energy facility, are eligible to generate what we call emissions performance credits. Other facilities outside the electricity system typically have two benchmarks, both a high performance benchmark that operates similar to the good as best gas for electricity, or a facility specific benchmark, which starts relative to their own historic emissions and then ramps down until that facility reaches their high performance benchmark. So in a sense, TIER is a bit of a hybrid of the CCIR regulation and the specified gas emitters regulation for all facilities other than electricity facilities. In terms of regulated emissions, all facilities, large emitters and opted-in facilities are regulated for all direct emissions, and there continues to be an accounting for imported or exported heat, hydrogen, and electricity, so indirect emissions associated with those. CO2 from biomass continues to be exempt from the regulation or excluded from the regulation. So a biomass to electricity facility can also typically outperform that good as best gas benchmark and generate emissions performance credits. So here's just a picture of how the system works in both parts of carbon pricing in Alberta. So on the right-hand side is the federal fuel charge. Relatively simple. Any consumer that consumes a fuel is charged for the emissions associated with that fuel by the fuel distributor. That fuel distributor then passes on the money to the federal government, and the federal government recycles that predominantly to households in the form of household rebates, as well as 10% for other programming for things like schools, municipalities, hospitals, and small businesses. On the left-hand side, you have a picture of the tier system. So at the bottom, you have two regulated facilities. The arrows indicate the flow of money in the system. So emitter A has emissions in excess of its benchmark. Therefore, it owes compliance to bring its net emissions down to the benchmark. It can come into compliance in two ways. It can either pay into the tier fund, currently at a price of $40 per ton in 2021. It just increased from $30 in 2020. Or it can purchase credits on the Alberta carbon market, and those can be either offsets, which are generated from emissions reductions outside of the regulated system, or from emissions performance credits, which are generated by facilities that outperform their regulated benchmark. In the top right, there is also the ability to link markets. So currently, Alberta does not allow emissions offsets or allowances from other systems for compliance in our system, but we do allow the sale of Alberta emissions offsets or other compliance units out of the system. And in particular, there's an explicit linkage with the federal output-based pricing system for provinces where it applies. They've specified a number of Alberta emission offset protocols that are eligible to be used for compliance in their regulation. In terms of history of the size of the market and what types of true-up options people have chosen, it's evolved quite a bit over the years. So 2007, the first year was a half year, and we saw about $45 million into the fund and just over 4 megatons of emissions offsets just over a megaton of emissions offsets and APCs submitted. That's these center two columns. And then that kind of gradually or steadily increased through the years to 2019, where we saw about 10 megatons of emissions offsets used, 5 megatons of emissions performance credits, and almost 16 megatons of fund credits, which translates to about $475 million. 2020 was the first year of the tier compliance system, as I mentioned. So that's preliminary results are shown on the left-hand side. The reason they're not in the table is they're not yet finalized. Those were just submitted at the end of June. So we're still doing our due diligence and following up on any facilities that had issues in their regulatory filings. But at a high level, we saw about $550 million paid into the fund. We also saw a significant reduction in use of emissions offsets and emissions performance credits. That's primarily because the price for the fund is increasing from 2020 to 2021. So facilities generally chose to hold on to their credits and use them in future years where they'll have a higher value and pay into the fund at the $30 price. The number of regulated facilities went from about 100 in the original regulation to about 180 to 200 once we started having opt-in facilities in 2018 and 2019. And now it's almost 450 or about 450 facilities if you include the aggregate facilities because of bringing in those oil and gas facilities. So the system has grown quite a lot over the years, and it's a significant amount of financial value and activity that's being driven by the carbon pricing system. So our job as regulators is to make sure that everyone's has clear rules to follow and that they are following them and that they're implemented consistently across the system. And that includes the emissions offset system. So it's different from a voluntary emissions offset system because it's embedded in the regulation and has real financial penalties associated with non-compliance. So maybe just quickly pivoting, so that's the high level overview, pivoting specifically to renewables and solar. So facilities have a choice under the regulation. A renewable facility can participate in the emissions offset system, which Lindsay's going to talk a little bit more about, or it can opt in to the regulation as a regulated facility, which would take it out of the offsets and then into the generation of emissions performance credits. There are some rules around who can opt in because the system's generally designed for larger facilities. So there's a capacity limit on the size of facilities that can opt in, and that's just for administrative feasibility because those facilities have some more rigorous reporting and verification requirements. If a facility is part of the renewable electricity program and has contracts signed where the government holds the rights to the renewable attributes, then it can't opt into the system. And similarly, if a facility is selling its renewable attributes, such as renewable electricity certificates or RECs somewhere else, that same unit of production that generated a REC can't also generate a EPC or emissions offset. So details of that are in the regulation, section 4, sub 11. And then just my last slide before I switch and head it over to Lindsay. So there's a couple of differences between offsets and EPCs. Offsets, you are considered to be voluntarily entering the regulation if you participate in an emissions offset project. So all of your obligations are voluntary, but that's your pathway to generating emissions offsets. There is a slightly higher grid factor currently for offsets. Lindsay's going to give the details on that, but that's because it's calculated based on the approximate emissions intensity of the electricity you're displacing. So it's called the grid displacement factor, which is a little bit higher currently than the 0.37. So you can generate a few more credits. Emissions offset projects have a limited period of time for which they can generate credits. At the end of that credit generation period, a facility can switch from being an offset project to opting into the regulation and likely generating emissions performance credits or EPCs. The difference between EPCs and offsets is EPCs are generated once we review the regulatory submissions. So that in a sense, they're pre-certified or pre-reviewed. There's no limit on the crediting period. So as long as your facility is outperforming that benchmark and the tier system remains in place, you're eligible to generate credits. And because of that sort of pre-reviewed or pre-certified nature of EPCs, we have heard from market participants that they may trade at a slightly higher value. So while it's a lower grid factor, you may be able to negotiate a higher value in the market. It's important to note that we don't control the price of emissions offsets or emissions performance credits, and we currently don't require disclosure of that price. So that's a private negotiation between the person who holds the credits and the regulated party who would be purchasing them to use them for compliance. Notionally, we would expect that credits would not trade at above the price of the tier fund, so that current $40 per ton. So that's it on the tier system in general. I'll hand it over to Lindsay. We'll be doing a Q&A at the end. So I see a bunch of questions flashing up already. We will get back to you, but I think we're going to go through all the presentations first. Thanks.
Hi, everyone. Thank you, Justin, for the good overview of the tier system. And so now I'm going to get a little bit more into the nitty-gritty details of the offset system and how you can start an offset project if that's what you're interested in doing, and maybe just understand a little bit more about how the system works. So some of the key requirements in the tier regulation, there's a there's a section 19 in the tier regulation that outlines some of the main requirements for offsets. As Justin mentioned earlier, the reductions must occur in Alberta. So we don't accept emission offsets where the reduction didn't happen in Alberta. The reduction must be from an action that's not required by law at the time the action is taken. And we refer to this as additionality or legal additionality. The offsets and the emission reductions must be real and demonstrable. They must be quantifiable and measurable, and we need to have records to prove this. And these records are critical to the operation of the system. The action that caused the reduction needs to have happened after January 1st, 2002. And the emission reductions must not, they basically can't be part of a regulated facility. So those are the main, the structure requirements in tier. And so the way that we quantify emission offsets is that we have quantification protocols, and they're called like approved Alberta quantification protocols. We have 19 protocols in the offset system. They serve a variety of sectors, including like agriculture, waste, forestry, oil and gas. And the protocol development process is fairly rigorous. It can take, no less than 1 year, sometimes up to 2 to 5 years to develop a protocol. And the protocols are based on science, and a technical working group is involved, and it's quite a rigorous process to develop a protocol. And then once emission offsets are quantified and serialized, they are tracked on the Alberta Emission Offset Registry. And so we have a third party that manages our registry and tracks the offsets and the EPCs actually. And the registry is operated by Canadian Standards Association, so it's on its own separate website. And like Justin said, there's no price disclosure, but you can go on the offset registry and see offset projects and see the serial ranges and see if there's offsets available to purchase, or you can look at project documentation. It's meant to be a transparent registry. So we have two specific protocols in Alberta that are potentially related to solar. We have a distributed renewable energy generation protocol, and it was developed in 2013. This protocol is for microgeneration, so wind or solar less than a megawatt. We have 4 existing projects. They're all actually solar projects as far as I know. And we have about 9,000 tons of CO2e that's been serialized with those projects. And so being that this protocol is a little bit older, it's 2013, the microgen regulation has actually changed since that time. And I can't remember what number the megawatt changed to, but if you have a project that's in the microgen space and it's meeting the requirements of the microgen regulation, there is the option for us to consider a deviation request from the protocol, and we have accepted, or we've received deviations on this before. So don't let that be a complete barrier. Just come and chat to us about that. And then there's also the solar electricity generation protocol. This is sort of for bigger grid connected solar generation projects. We have 7 of these offset projects listed on our registry, and almost 19,000 tons have been serialized for that. So now we'll talk a little bit about the grid displacement factor. So the grid displacement factor is the factor that's used in the quantification methodology, and it's referred to in the quantification methodology. Justin, can you switch slides, please? And it is, thanks. And it's the factor that we use to quantify the emission reductions from the electricity. And so like Justin said before, the grid displacement factor is calculated based on on the margin and based on the average grid intensity essentially of the grid. And so it is different than the benchmark. But the grid factor, it's published in the carbon offset emission factors handbook if you're looking for it. Sometimes not everybody knows to look there, but that's where it lives on our website. And the current factors that are published will be the same, or they'll remain the same until the end of 2022. And we are currently reviewing the factor because as the grid greens, the factor will go down or will likely go down. The current grid factor is 0.53 tons of CO2e per megawatt hour for projects that are displacing grid electricity with renewable generation. And then the grid factor that includes line loss is 0.57 tons of CO2e per megawatt hour. And that's to use in sources and sinks in situations where a project increases electricity use on site, or an energy efficiency project decreases grid usage, or for project displacing grid electricity with renewable energy at point of use. So there's often lots of questions about the grid displacement factor. I think I saw some already in the Q&A as I was listening to Justin. So hopefully that answers some of the grid displacement factors. One question that we commonly get is like, is the grid factor the same for the whole project? And so offset projects have an 8-year crediting period with a potential for a 5-year extension. And the grid factor that you begin with is the same for the 8-year crediting period. And then if you're applying for a 5-year extension, the grid factor that you would use for the 5-year extension is the grid factor that's in effect at the time the 5-year extension is granted. There can be some variation to that. For example, if you have an aggregated project and you start out with 100 projects and then you add a project a month or whatever, or you add a project halfway through your 8-year crediting period, then you would use the grid factor that's current at the time that you add the project, and that applies to the whole project. But that's usually not the case that solar and renewable projects are adding projects like that. They usually start with the same amount of projects up front. So hopefully that answers some of the questions about grid displacement factor. Then I'll just show you this next graph. It's just a breakdown of like where most of the offsets have been generated since the beginning of time. This is current to July 2021. So this has the data in it from the 2020 compliance year. So as you can see, sort of like wind and tillage and carbon capture and storage, conservation cropping, those protocol types have generated a lot, like the majority of the offsets over the years. But as you can see by the red bars, like most of those are, retired. There's not a bunch of active credits in that space anymore. And some of the other protocols that are lesser used are still having lots of active credits. Like for example, pneumatics has lots of active credits. And you can see solar and distributed renewable energy generation down there at the end. They barely even make a dent. And so it would be great to see more of those projects and see those projects have more uptake. Yeah, so that's just to give you an idea of where most of the activities happen in this space. This next graph is just, it's more of a visual. The information was provided in the table that Justin spoke about earlier, but this is just to sort of show the impact of the offsets used by compliance here. And so from 2007 to 2011, the offsets were increasing, but then we see in 2015 that almost no offsets were used for compliance. And that was because that was some banking behavior that we were observing because a price announcement was announced at that time. And so people chose to keep the offsets that they had bought at a low price and pay the fund price that was lower at the time and save those offsets for a future time. And then you see in 2017, 18, and 19 that lots of offsets were used because people needed to use those up before they expire. And then now in 2020, because there's an increase in price coming in 2021, we saw a bit of banking behavior again. So that's just the history of the offset use. So if you're wanting to have an emission offset project, I just have stepped out the process at a high level. And the first step is to really understand the rules really well. So the rules and the regulations are what enable offsets to be a thing and to be possible. And the rules include and are the like culmination of the tier, the regulation, the standard for greenhouse gas emission offset project developers, and whatever the applicable protocol that you've chosen to use, depending if it's distributed solar or distributed energy generation or solar. So it's important to understand that generating emission offsets is a voluntary thing, but you need to understand and follow the rules. That part isn't voluntary. So if you've decided to do this, then you need to make sure you know the rules really well and follow them. And so because offsets are used to meet a compliance obligation, they must be measured and metered to the same standard that regulated facilities are held to. So the regulated facilities are required to reduce, and this is helping them to reduce. So the offsets need to be, of a very high quality of measurement and standard and all of those things. So that's really important to the whole process. So step one is to really have a good handle on how all of the rules work. Step two, if you decided that you understand the rules enough, you can, and you have a project, you would build your solar project. And then once you're ready and your project is connected to the grid or begun or started or whatever, like generating electricity, you would submit an offset project plan to the offset registry. So that's not to us, that's not to the government, that's to the Canadian Standards Association third party that I talked about earlier, and that's our registry. And so on the registry, there's templates for this project plan. And then if the project is an aggregated project, you also submit an aggregated project planning sheet with it that lists the locations and serial numbers or some sort of unique identifier for each of the project locations. And your project begins, like the offset project begins, and the offset project start date is the date that you submit this plan to the registry. So it's very important to submit the plan to the registry. And the documentation needs to be complete, or there can be a delay in the start date. So if you send in partial information or partial documentation, then the registry won't necessarily be able to honor the start date unless it's complete information. And then also your activity must begin on or before the offset start date. And so you need to have, the activity needs to be happening. And then the project can begin and it can generate offsets. And then once you've generated offsets, the next step is to do project reporting. And so the interval, next slide, please. And the interval for project reporting is kind of up to you. It depends a little bit on your business cycle. It depends a little bit on what's economical and what makes sense. And when you have the data and all of those things. But once you've gone for however long, lots of people do a year. So I'll just use a year as an example, but you don't have to do a year. You can do 3 months or 6 months or 2 years. You submit an offset project report again to the Alberta Emission Offset Registry. And that report must be verified by a third party prior to submitting the report to the registry. And the verification report must be a pass. And so when the registry has your offset project report and the verification report from the third party assurance provider, they will process the documents and they will serialize and assign serial numbers to your emission offsets. And again, the reporting frequency, it just depends what it is over the 8 years. And then step 4 is once your offsets are serialized, you can transfer them or sell them to a large final emitter, and then that large final emitter can use them to meet their compliance obligation. I mean, probably step 4 is happening all the way along. I assume that most people have a market for their offsets or have an intended buyer for their offsets before they actually generate or make them. But in terms of the logistical steps, you can't really sell them or give them to somebody until they're serialized. Yeah, so those are the main steps in doing an offset project. And that was pretty much all that I had to chat about today. This is our contact information. The best way to get a hold of us is through the aep.ghg email that goes to us like a central location and gets distributed. And then so if anybody's away or on vacation or off sick or anything like that, your information will get sent to the right person. I think that's all. Are we doing Q&A now? Or
no, actually, we're going to ask that Christine present last. So great. Thank you, Christine.
All right, I'll share my screen here. We all good on that? I'll just take silence as yes. Thank you so much for the introduction, Lorraine and Justin and Lindsay, for that background. That was really great to start us off. I'm really excited to be here, and I'm hoping to be able to answer some common questions about solar and carbon credits. The two main overarching questions are why you should potentially participate in the carbon credit market for solar projects, and how you can participate, how you can actually get started at doing that. So first, I'll introduce the stranger talking to you through your computer screen really, really briefly. And then I'm going to provide a bit of a background on carbon credits. Some of this stuff has been mentioned, but I'll provide it from the radical perspective and from my perspective. I'm going to show you two registered projects that are actually on the registry that Lindsay talked about. And I'm going to answer some of the common questions, FAQs, and tell you some facts about carbon credit generation for solar projects. And throughout, I want to provide lots of resources, but I'll start by saying that there's tons of resources on the Radical website. They're free, there's blogs, there's old webinars. Carbon 101 is an awesome webinar to watch. It's on YouTube, so you can watch it at 1.5 or 2.5 speed if that's your thing. And they're all available on our website, radicalbalance.com, which has been posted in the chat already. So I'll keep this super simple, short, and sweet. The first fact about me is that I love alliteration. Sustainability, startups, and solar. I have a degree in sustainability, but more importantly, I am a huge sustainability nerd. So everything in this space gets me jazzed. I started my career in startups where I worked for a high growth tech firm and then transitioned to actually coach entrepreneurs at the earlier stages of their business. And I absolutely love working with entrepreneurs. And now I'm lucky enough to lead Radical Solar team, where I try to bring revenues from the carbon credit market to all kinds of renewable projects across Alberta, but also globally. So a little bit of the carbon market background. We've come a long way. I'll start by saying, and Justin sort of touched on this, the Alberta carbon market is world-class. We deal with all kinds of different voluntary and regulatory markets, and the Alberta market is something else. It's something special. It is really fantastic. Since its inception in 2007, almost 70 million credits have been generated, valued at over $1 billion. And throughout this entire time, demand has been increasing and supply has been decreasing, which is always good news for those that have supply in a marketplace. We don't have a total predictability on the future of the carbon markets, but what I can tell you is that it's positive. And as more and more people participate, there is going to be growth. And that's all that we know for sure. And I'll tell you a little bit more about the uncertainty as we go through. I wanted to show you a couple projects that actually exist on the registry that Lindsay mentioned. So the link to the registry is at the bottom, and I know this will be posted, so you don't have to rush to get that link down, but it's a little bit obscure to find, so I wanted to make sure that it was provided. These two projects are both generating credits right now. They were both done by Radical, and they're both solar. They're really, really interesting because they're one of each of the different protocols. So you might recognize the Innisdale project just because of its scale. It's really, really impactful at a lifetime emissions reductions of 160,000 CO2 equivalent. It's really, really awesome. And then the other one is really interesting as well because It is the first solar pool where Radical took a bunch of smaller projects, 9 in particular, and combined them so that they could generate credits. Radical is the leader in solar credit generation within Alberta. So Lindsay mentioned a couple numbers of, there's a 9,346 tons or credits that have been generated from solar in terms of the aggregated and the distributed renewable protocol. Radical generated 9,333 of those credits. So we're really, really leading in this industry. And of the 18,000 in the large scale, we've generated over 9,000 of those. So it's a space that we absolutely love to be in, and we're really, really proud of our impact so far. Let's get into the meat of what I'm here to teach you about today, hopefully, and provide some clarity around. I really wanted to think about the most common questions I get when I'm talking to clients, and I listed some of these out because if you've considered doing a solar project in the past, you've probably encountered one of, if not most of these questions. So the first question, project eligibility. Lindsay mentioned 2 protocols, the distributed renewable and the large scale solar. I've listed off some of the basic criteria for these. With the distributed renewable, we have an offer at Radical where we can provide a pool that we can aggregate projects. So if you have a really small project of 50 or 100 kilowatts, we can put it in our pool so you can actually take advantage of the market. It's a little bit more of a specific protocol where it has to be less than 5 megawatts, it has to be in Alberta, it has to be grid connected, and it can't be grant financed only because typically that means that you've given up the ownership of the environmental attributes. But if you don't know if that's true, we can have a conversation offline about it. Large scale solar is a little bit more flexible, and that's why there's sort of the NA and the environmental attribute ownership on the chart. We deal with these on a customized basis. So if you have a project that's over 5 megawatts, let's chat offline about specific questions relating to your project, because chances are that it will qualify for carbon credits as long as it exists in Alberta and you own those environmental attributes. Lindsay talked a lot about the process, so I'll be really brief here. There are a lot of steps. It can get complicated. There's risk involved, but Radical aims to make it really simple. So if you want to have a conversation about what the onerous nature of carbon credits is, or what you'd actually have to put into it, the name of the game for us is to make sure all you need to do is cash the check. We'll do all of the steps for you so that you don't have to worry about it. But I wanted to list out and overview some of these. Lindsay did my job for me, so I don't have to go through them specifically. Another question I often get is about how many credits you can generate from solar. So we have to distinguish between capacity and produced. So capacity is the capacity of your solar panel, and produced is power produced over the year. So in this case, 100 kilowatts of capacity is about 80 credits a year, and 1 megawatt of power produced is about 500 credits a year. These are just rough estimates, but they can give you an idea of what you might be able to get in terms of carbon credits throughout the year from your projects. And you can just multiply these to, if you have a 200 kilowatt project, just multiply both the numbers. Now into the interesting piece is predicting credit prices. Predicting credit prices is really difficult. It's like looking into a crystal ball. And the reason it's like looking into a crystal ball is because it's policy dependent, it's an open market, and it has contradicting indicators. So the carbon market inherently and the price of carbon depends on the government and depends on policy, because one change in a policy or a change in government can affect the market in really, really dramatic ways. It's an open market that depends on supply and demand. So if supply increases or demand decreases, vice versa, it's going to change what the price is within that market. And that also ties into willingness to pay, is it depends on a willingness to pay from the market, from the demand, and that can be variable. And the last piece is that there are contradicting indicators. What I'm trying to say here is basically that for every positive indicator that says the carbon price will increase, there's probably an equal weighted negative indicator that says it might decrease. So while we have positive outlooks, if you say, for example, the carbon tax is increasing, and typically the price of carbon credits tracks to the carbon tax, so that means that carbon credits will increase. I could come back and say, well, what if there's a change in government federally in a few months and the carbon tax doesn't increase, or it stagnates, or it decreases? There's just an equal pros and cons list that says that it's just like looking into a crystal ball to try and predict. And the most important part, and hopefully the slide can help answer that question I talked at the beginning about, which is why you might want to participate in the carbon markets with your solar project, is that they can be really, really valuable. So how much money can you make? I put out a number here, $130,000. This number is based on an 8-year guaranteed price at a 1 megawatt project. And that's what an agreement Radical will sign today. This price only goes up. So it gets really interesting really fast if you increase your capacity, or if you take on a little bit more risk by playing in the market and allow Radical to do what it does best on the trading desk. Thank you so much for your time today. I'm really looking forward to the panel discussion and answering some of those awesome questions in the Q&A. And feel free to post any questions in there or reach out to me and we can talk about your specific questions or your specific project.
Great. So now we'll just get everybody to turn on their cameras again, all the panelists, and microphones as well, and we'll go through some of the most popular questions. And I will just let you guys decide who wants to answer each, because I think you have a better idea of your expertise in each one than I do. But we'll start at the top here. Are there downsides or disadvantages to pricing methane and other greenhouse gases rather than merely CO2?
I'll take that one. It's an interesting question. I mean, we're obviously biased because we like the system that we run. So we include all greenhouse gases that are included in the national inventory. So that's CO2, methane, N2O, and all the hydrofluorocarbon, parafluorocarbons, and those really high global warming potential gases. I don't know if, like, I can name a lot of upsides. I think there's a big advantage to sending a price signal that's common across CO2 and methane, and that's driving a lot of interesting near-term emission reduction opportunities. I would say one of the challenges is as you get into those other gases, the quantification can be much more challenging than CO2. So, you know, if you're trying to quantify the emissions of SF6 from your switchgear or N2O emissions from a biofuel boiler or something, there's a lot less certainty on those than CO2. So that's something that we kind of work through carefully in our quantification requirements for the regulation. We do provide some explicit guidance and some flexibility around those things, but I think those are the key points, unless Lindsay or Christine want to add anything there.
I just want to add that, I mean, ultimately, I think the number one item is impact. And when we look at all of the different GHGs, the only reason we talk about CO2 or CO2e is because that's what we're equivalent, like that's the equivalent of, you know, if you have 1 ton of methane, it has its own indicator that makes it, you know, 25 tons of CO2. And so we're still measuring for that impact, and just it's making it equated to 1, just like a currency exchange. We don't want every single city in the world to have its own currency, because it'd be really hard to go from Edmonton to Calgary and, you know, spend money or figure out what things are worth. So it's becoming equivalent to CO2e, just so we can talk about it more simply, but it's not saying that methane is equal to CO2 in any way, shape, or form. And when it comes down to impact, that's ultimately what the aim of the game is, in my personal opinion.
Yeah, good point, Christine.
Great. Let's go on to the next question from Rob. Are there any agricultural PV systems in Alberta at this time? Agricultural PV is where solar power is being generated over top of crop growing land. This is something that is gaining acceptance in Europe. It takes advantage of AI controlled directionality, position solar panels, and transparent solar PV cells. Anybody want to take a stab at that one?
Christine, you might be best placed for this one. I've heard of systems over top of grazing land. I haven't heard of it over cropland, but.
Yeah, I don't have any particular examples. That sounds really, really cool, really high tech. I wrote it down to look at it later because I'm a super nerd, but I don't have an answer for that right now, Rob. If I find one, I'll shoot it your way.
There's nothing stopping you, Rob, so feel free to be the first.
Great. Okay, the next one is, could private homeowners be part of this system, as with vehicle to grid and home to grid energy? Does this cause any technical problems for the grid?
So I think we're all kind of emissions people and not grid people. I have a lot of trust in my regulatory colleagues that run the electricity system. There's thousands of PV systems that are hooked up to the grid. So I can't get into the specifics of the grid connection problems. But certainly for the offset system, we are explicitly trying to recognize solar systems that are connected to the grid. So I would say it's a requirement, not a barrier.
Okay, great.
And I'll just add at Radical, we're working on the issue with residential solar and carbon credits is the scalability and the economies of scale. It takes a lot to submit, as you saw all the steps in Lindsay and in my presentation, it takes a lot to submit these projects. So at 7 kilowatts to get up to that economies of scale. But at Radical, we are a software company and we're actually working on a software solution that would bring carbon credits to residential. So stay tuned. And now the IT department is going to be like, Christine, what are you doing? But I think that it's absolutely incredible, and we should be able to do that. And I want to generate carbon credits. I sequester carbon through my soap when I shower. Why can't I do the same when I'm generating and giving back to the grid?
Yeah, and the key point there, which you mentioned really well in your presentation, Christine, is for folks that have gotten grants, either from previously Emissions or Energy Efficiency Alberta or some of the city grant programs, often those grant programs retain ownership to the environmental attribute. So you'll just have to be careful about making sure you have the right to transact on your renewable attributes.
Great. And this again, another grid question, but perhaps appropriate here. When do you anticipate the government of Alberta will implement revised electricity grid displacement factors?
So as Lindsay mentioned, we're looking at that right now. We don't have a fixed timeline on when the new factor will be out. We have committed to keeping the existing factor until the end of 2022, so December 31st, 2022. So as long as your project starts before then, you'll be on the current factor. We hope to be out to stakeholders this fall. And usually it's a two-step process. We don't just kind of snap our fingers, update the factor. We usually put out a draft and explain some of the methodology and rationale and do a 30-day comment period, and then consider those comments before finalizing anything. This year is a little bit unique for two reasons. One, coal is coming off very quickly, which wasn't really a factor last time we updated it. And two, we're overlapping with a scheduled regulatory review for the tier system as a whole. And the federal government just updated its benchmarking requirements for the tier system. So our top priority at a high level is making sure that tier continues to work and continues to get recognized under the federal system so that we retain jurisdiction, and all factors within the tier system, including the grid displacement factor, have to be considered in that context. So there's a little bit more complexity this time as opposed to just gathering the data and pressing play on a spreadsheet.
Okay. Anybody else have anything to add there? Okay, we'll go on to the next question then. Will solar offset projects be able to be aggregated similar to what is allowed under the mnemonic protocol? If no, what needs to happen to allow aggregation?
The answer is yes, solar projects can be aggregated. There's no barriers to aggregation right now. The only thing that's different from an aggregated project versus a non-aggregated one is you need to submit an aggregated project planning sheet with your project plan, like I mentioned, and then you need to submit an aggregated project reporting sheet when you submit your report. So nothing preventing aggregation.
Great. Next question. To date, the only renewable facilities that appear to have generated EPCs appear to be TransAlta-owned facilities. Curious why a wind facility that has passed its 8-year offset crediting period and its 5-year renewal period would not, as of today, already begun generating EPCs. If it is, in fact, allowed, is there any reason you can think of that might account for this? Not sure if that's too specific for you guys, hoping you know what.
No, it's not too specific. I don't have the list of facilities in front of me, but yeah, generally speaking, any large scale renewable project where it's worth it to do the administrative work of filling out the compliance reports and having them verified. Once they finish their offset period, they will flip over and start generating EPCs as an opted-in facility. TransAlta happens to own some of the older ones, so they would show up as larger share in the EPC registry for some of the hydro facilities. But there are others that I know are actively looking at it. Like Suncor has a wind farm that recently switched over. So I don't think there's any particular reason. It's more just a coincidence of the age of facilities that exist in Alberta and who owns the older ones. Christine, I don't know if you have additional insights there. But...
Okay, great. Now one specific for Justin. Justin's slide says EPCs may trade at a slightly higher value than emission offsets. Anecdotally, I don't understand this conclusion. If an offset has a grid intensity of 0.53 and an EPC has an OBA of 0.37, how can the EPC have a higher value? Seems that offsets should trade at a higher value because they offset more carbon.
Yeah, I probably didn't explain this very well. So the grid factor determines how many credits you generate per unit of electricity. So a unit of electricity in an offset project will generate more offsets than that same project would on the EPC side of the fence. So that's where the grid factor of 0.53 versus 0.37 comes in. What the bullet was meant to speak about was the actual price you get for each individual credit when you go to sell it. So one EPC, which is 1 ton of CO2e, will typically trade a little bit more than 1 ton of CO2e from an emissions offset project. But someone like Christine would have a lot more data and experience on the range of values that different projects get, because there is a fair bit of variability there.
Yeah, it's definitely a more complicated answer and project specific, but at the end of the day, I think the word leverage was used twice in my introduction, which is definitely my bad. But that's what companies like Radical and trading desks at companies can help do, because it's more about volume when you look at the price of carbon that you're going to get and in the credit generation. So if you have more volume, that buyers would be more interested in paying a higher price. But ultimately, it comes down to our trading desk is just made up of insane geniuses that I get smarter talking to them for 30 seconds. So that's really where you see the discrepancy. But it's pretty project specific, and I'm happy to have a more in-depth conversation about that.
Great. We have a question here from Gino. What are we doing about integrating the Alberta carbon market with the international market?
Yeah, I can take that one. So currently, as I mentioned in the presentation, credits from outside of Alberta are not allowed for compliance. That's something that we look at in every regulatory review to see if we should change there. Historically, we haven't changed because Alberta has been out ahead. So our price has been quite a bit higher. We've been trading at much higher volumes, and we've had quite a bit more stringent requirements around our credits. So it hasn't really made sense to link. The other thing that's a little bit unique about Alberta is we're subnational. Obviously, we're a province, not a country. So a lot of the linkages that you see right now are between national or even multinational systems. So like the EU emissions trading system has considered linkages to other national systems or international systems. Probably the most immediate place where a linkage would potentially make sense, and where we've already taken some steps, is linking to other systems within Canada. So we have enabled the use of our credits in the federal output-based pricing system, which is the name of their system that's the equivalent to TIER. A number of provinces have enabled use of credits from other provinces in their own systems. So that'll be kind of the watch this space thing in the near future, I think, because we're all under the same federal benchmarking rules. So you'll see similar prices and stringency requirements, so that creates an environment that's maybe more conducive to linkages, but nothing in the immediate term. And then Christine, you have a lot of experience in voluntary systems and international systems, so feel free to jump in.
Yeah, it's definitely something that I have to determine whether or not you're going to be able to be regulatory or voluntary when we have that initial call. And to me, the unfortunate logic break is, even a solar panel in Saskatchewan or 1 meter away across the Alberta border, why does one of them get a benefit of carbon credits and one of them might have to play in the voluntary space, which inherently has a fraction of the price of per ton? And I have projects that are doing, you know, like 25 megawatts in Ghana, and that's not going to generate very much revenue because the carbon credit isn't regulatory. So you can play in the voluntary space and play internationally because most of those registries do not have a jurisdiction component. They're just looking for reductions, and they're looking for the tons, because at the end of the day, we share the earth with everyone, right? So wherever you're reducing, but the devil's advocate as well is that it makes sense for the regulatory environment to want to try and reduce reductions the way that they can control, the way that they can within the bounds of this province. So like I said, we're world class. I'd like to see everyone get to Alberta's level very soon. And the federal legislation coming in, the federal carbon market coming into play next year will be instrumental in seeing that, because you'll see that logic break of the borders just disappear and dissolve. If you can generate credits in one province, you should be able to do it in another one. But it's a long going process. There's different standards across the world. All of these different factors definitely contribute to it. So we're lucky here, but I hope we can kind of expand our luck across Canada and then across the globe.
Great. It's very inspiring. Are there any plans to amend the regulation around barring grant finance DERs from participating in the carbon market? A rough estimate is about 2/3 of Alberta households owned solar is ineligible for credit generation for themselves.
So I apologize, Gino. I don't know what a DER is. Christine, I don't know if you or Lindsay, if you know what that is.
Just heard this term and had to email someone asking, but I have my email closed right now. They had to explain it all for me because I was like, I've never heard of this before. So you learn something new every day.
Yeah, I think we can grasp it from the general questions asking about households who got grants participating in the solar.
Right. Distributed energy resources is what it is.
Thank you. So there's no intention to discriminate against small scale or distributed solar. In fact, we have a protocol kind of explicitly enabling that. For those distributed resources, there's an administrative feasibility challenge, which Christine spoke about, but the rationale on the grants is kind of a fundamental principle of emissions offset systems, and Alberta's not the only one, where you can only sell your reduction once. And when you sign that grant, if that grant agreement said we have ownership of your reduction, then you can't turn around and sell it to someone else. Often those grant programs that existed, the reason that they had those clauses in was they were fairly generous and they were closing the gap on making those investments kind of self-sustaining, or where people would get back the money that they put in. So the goal of the system is not to generate as many credits as possible. The goal of the system is to recognize real reductions and drive down emissions in the province as a whole. And TIER is not the only thing that exists to drive emissions reductions in the province. We have a multitude of policies and financing programs, and the intention is all of those things need to work together to drive down emissions in the province.
Great. Anything to add, Christine or Lindsay? Oh, great. I think we have time for one, possibly two more questions. We just have like 2 minutes left in our webinar. So I have, how are cogeneration facilities treated under TIER? For example, if an oil and gas producer uses natural gas to generate steam, then uses excess steam to generate electricity. That's an example, I guess.
Yeah, so I mean, this can be a two-minute answer or a 2-hour answer. I'll obviously give you the 2 minute. So any regulated facility that produces any product can get the recognition of each of those products, and electricity is just one other product. So a cogeneration facility will typically be at a facility that's producing something else, say bitumen or fertilizer or something. So they'll have a benchmark for whatever their core product is, and then they'll also get the 0.37 tons per megawatt hour for electricity. So the goal is to treat on-site electricity generation the same as we would treat off-site electricity generation. That's why there's a common factor across the board. And that's not just for cogen. So one of the things I didn't mention is if an industrial facility were to install a whole bunch of solar panels on their site and generate electricity, that would also be recognized in their regulatory calculation at that same 0.37 factor.
Okay, great. I think we don't have any time for any more questions. We are actually in about 30 seconds ending this webinar. I want to take this opportunity to really thank Justin, Christine, and Lindsay for participating and sharing all this great information with us, as well as the sponsorship from Radical. Thanks very much to Radical for sponsoring this webinar. And remember that we will be sharing a video recording of this webinar on our website, and it was also broadcast on Facebook Live, where you can access it there. Thanks everybody for attending, and please sign up for our next Solar Series webinar in September.
Thanks, everyone. Thanks, Lorraine.
Thanks.
Thanks.